Services at Charles Schwab, and Caroline's a senior markets correspondent. We didn't quite pull off that close, Caroline, and we also didn't really pull off the dip buying in small caps either, so that was just kind of a tough day.
It was a tough day unless you were looking at United Health, Johnson & Johnson, Cisco,
healthcare, you're loving
Chevron, Dow. Yeah, so the Dow definitely the outperformer, although it would have been better if it wasn't for Amazon, Apple, Microsoft, Salesforce. So tech definitely weighing on the Dow today, limiting those gains. But obviously S&P and NASDAQ really getting crushed. The chip space certainly taking a hard hit with those headlines out of Bloomberg in terms of potential ramping up of geopolitical issues, with Trump saying, we should potentially charge Taiwan. And then, of course, there's concerns about export controls and that type of thing. So I think at least in the chip space, demand is still there. So we'll have to see if this is just kind of profit taking or if something bigger. Yeah.
This will be an important test rest this week to see if they just scoop in and buy this stuff, especially for Taiwan semi earnings tomorrow. What do you think about that close, Scott Durfey? Kind of a meek ending to the session, especially considering that we've had a lot of strength, especially in the small caps and stuff.
Yeah, meek. That's an interesting adjective. I'm not sure I would have chosen that one, but it's pretty brutal, actually, right?
Yeah, brutal,
Yeah, we've seen the NASDAQ. I mean, we haven't seen this low in the NASDAQ or this bad of a day in the NASDAQ since 2022. But, it's not. I don't think this is anything for us to freak out or panic about. The markets are going to do this. We've been in an uproar for quite a while, and it's been sustaining. So, it's okay that we get a little, geopolitical and all these other things, be they as they are. They're going to play into this. And every once in a while, we're going to just get this kind of flattening. And I'm not panicking about it. Not yet. We'll see how things continue to go. We've got a lot of stuff still coming out. We'll see how that all weighs in.
Well, airlines will be a subject tomorrow. This was not a perfect number from United that just came out. They did beat on trailing earnings relative to the estimate, but their outlook did not. So second quarter numbers were okay. Third quarter numbers were disappointing. Maybe also bad or ugly. 275 to 325 for their next quarter adjusted EPS. Street was looking for 338. Their range will not meet those expectations on the high end, missing by 13 cents, but also a low end that potentially paints a picture of margin pressure that, as we heard from our guest earlier, John Stasic from Argus, United has been able to dodge some of that with their wider, bigger fleets, more fuel efficiency, and also kind of benefiting from some of the constraints of other players more dependent on Boeing. So I don't know, Caroline, I think this is a pretty disappointing bottom line outlook.
Heading into earnings, even before Delta reported, Raymond James, an analyst over there, said the outlook for the next quarter is as clear as mud. And now that we've heard a disappointing Q3 outlook from Delta, and now, as you said, from United, I think that the outlook's a little bit clearer. It's just kind of disappointing here. And even in terms of the Q2 numbers, now keep in mind we had that miss on the bottom line for Delta. It's a miss on the top line, actually, for United here. If you take a look, Q2 revenue was expected to come in at $15.13 billion. That would have been about a 6% increase. Actually came in around $14.98 billion. So that's a miss there. Bottom line did beat, though. The expectation was for $3.97. It came in at $4.14. So a mixed report, call it. I was just taking a look to see how shares are performing. It looks like we're investors focused on the negative there in terms of the miss, especially in terms of guidance. I did see, I was just kind of scrolling through the commentary. I did see notes of a challenging environment, so it's going to be interesting to see what they have to say. Obviously, Delta had really stuck by the full year outlook and said they were confident in that. It seems like that's going to be the case for United as well. It says sees mid-August as an inflection point when industry-wide oversupply eases and United is best positioned to benefit, but it could be a little bit of a turbulent time to get there.
Yeah. I think that analyst nailed it with the outlook as clear as mud. What do you think, Scott? Kind of an interesting spot for airlines. We've seen that travel has been generally heavy and we're willing to spend, but it seems also like the financials are really tough for these airlines, and possibly some of that booking aggression might be fading according to their outlooks.
Yeah, and I think that's accurate. The other thing that I'm concerned about, and it's not just for United, but for all these airlines, is what we're seeing here is because of fuel costs and a few other things. We're seeing the cost per available seat mile go up. For United Airlines, it's up 4% year over year. Now, it's down a little bit quarter over quarter, but it's still up 4% year over year. Those kind of costs are going to come into play and eat away at the bottom line. We're going to see that with United Airlines and all the other airlines if they can't get those things under control a little better. Now, they're acceptable, they're competitive, etc. But again, something that they definitely need to be keeping their eyes on, that and all the other operating costs that are involved, which are quite numerous, actually.
Yeah, well, that's where the market's been pricing Spirit and Southwest for like major disruption or destruction in the case of Spirit, as we talked about earlier this morning. Caroline, just a bevy of negative commentary on that stock. So it's hard to see how there would be such sustainable dispersion in this group. I get their competitors. I get the kind of sometimes it's a zero-sum game. But with the cheap airlines being priced for like really major negativity, to me, this gap might make sense to close a little bit with some of the higher flyers coming down somewhat.
And it looks like that's going to be the case when you actually look at what the stock is doing right now in reaction. Obviously, we have to wait and hear the earnings call as well. As I said, they did maintain their full year outlook, and it's basically the $9 to $11 per share. Wall Street was looking for around $10 per share. So that is in line, but it looks like they are going to take a hit. And United was the best performing airline of the major airlines heading into this report. Now, or I guess neck and neck with Delta. Delta's just slightly below. And all but one analyst on Wall Street have a buy rating on United. So I think that it's going to be a case of, do we start to see some of that bullishness kind of come off following these results? If it's just 1 quarter of potential negativity, we might see that reflected in the share price. But if ultimately they still think that they're poised to at least meet expectations for the full year, I don't know exactly how investors will respond.
Yeah, well, I think we've kind of seen some of that come off already coming into this, because I would just, if I'm John Kirby, CEO of United, or Ed Bastian at Delta, Scott, one of these better performing airline companies, and I had to choose an environment in which maybe I gain market share over my discount competitors, but they're like going bankrupt, or we all win together, I'm pretty sure he would say, I prefer us all to win together. So that's where like this huge dispersion within the sector, to me, is unsustainable.
And I agree. Unfortunately, too, and I don't want to get into the way our economy is designed, but that's not really a capitalist society, right? I mean, so we do have some balances, some gives and takes that we have to have there in order to make that happen. So I agree with you. I don't have an answer or an idea as to the solution or how that gets circumvented, but definitely something that we should be paying attention to for sure.
Yeah. Hey, one other thing we want to pay attention to real quick, just to keep us honest here on earnings, and actually a really good chart, too, that deserves some attention, is Kinder Morgan in the oil services space. Has been a pretty consistent winner here now all year, and is giving us earnings. So I wanted to just hit that real quick for those looking for some insight into the energy patch. They did miss just the tiniest of bit on the earnings. But the sales did come fairly short of the estimate, less than 3.6 billion, and the street was looking for 4.1. So that's kind of a surprisingly negative number there for those tracking its stock down as a result. I think that probably makes some sense. Thing has been on a big run. Appreciate you guys. Thank you very much. Caroline, Woods and Scott Durfey.